Let's be honest about what is really happening in Washington right now. While Senator Cynthia Lummis talks about buying Bitcoin to solve the national debt, and while the Federal Reserve talks about a soft landing, there is a much darker conversation happening behind closed doors. It is a conversation about the only mathematical way out of a $36 trillion debt trap. It isn't Bitcoin. It isn't austerity. It is a demolition. There is a mechanism, one that has been used before in 1934 and can be used again, called the official gold revaluation. The idea is simple. The U.S. Treasury declares that gold is no longer worth $42.22 an ounce on its official books, but rather $20,000 or $30,000 an ounce. Overnight, the government's gold stockpile goes from being worth $11 billion on paper to over $5 trillion. It sounds like a magic trick. It sounds like a get-out-of-jail-free card for a bankrupt empire. But I am here to tell you that this isn't a solution. It is a default by another name. And when you look at what foreign central banks are doing right now, dumping treasuries and hoarding gold at the fastest pace in 50 years, you realize they are already positioning for this exact scenario. The world is moving back to gold, whether the US Congress likes it or not. Welcome to the Dollar Watch. Let's look at the numbers. We need to dismantle a dangerous myth that is circulating in the crypto community and even among some politicians. You hear people say, if we revalue gold, we create free money that we can use to buy Bitcoin or pay off the debt. This is fundamental economic illiteracy. Let's say the Treasury updates its spreadsheet tomorrow and says, our 8,100 tons of gold are now worth $30,000 an ounce. Does that give the government extra spending power? No. It is just accounting. It is marking an asset up on a balance sheet. You cannot spend accounting gains unless you actually sell the gold, and the US government isn't going to sell its gold. If they did, they wouldn't sell it at the old book value of $42. They would sell it at the market price. So, where does the new money come from in these proposals? It comes from the printing press. The idea being floated by some is that the Fed would print trillions of new dollars against this revalued gold asset, and then use those printed dollars to buy Bitcoin or pay down debt. Think about that for a second. We are going to solve an inflation crisis by printing more money to buy a speculative digital asset? It is madness. It creates inflation to buy Bitcoin. It debases the currency to chase a token. It solves absolutely nothing. The only scenario where a gold revaluation makes sense, the only way it actually fixes the structural rot of the US economy, is if it is accompanied by a return to a gold standard. Here is how a real gold revaluation works as a sovereign default mechanism. The US government currently owes $36 trillion. That debt is unpayable. We cannot tax our way out of it, and we cannot grow our way out of it. The only way out is to devalue the currency that the debt is denominated in. Imagine the US government announces, from today forward, the dollar is pegged to gold at $20,000 an ounce. Currently, gold is trading around $2,700. By pegging it at $20,000, the government has instantly devalued the purchasing power of the dollar by roughly 90% relative to real assets. Why would they do this? Because it allows them to repay their debts in devalued paper. If you owe $36 trillion and you devalue the dollar by 90%, the real value of that debt burden shrinks massively. It is a soft default. You technically pay back every bondholder, but you pay them back in dollars that are worth a fraction of what they were when the bond was issued. This isn't theoretical. This is exactly what FDR did in 1934 when he revalued gold from $20.67 to $35. He devalued the dollar by 69% overnight to wipe out debt. The difference today is the scale. To make the math work now, you don't need a 69% devaluation. You need a 1,000% revaluation of gold. To understand why this is inevitable, you have to understand what a dollar actually is. And I don't mean the green piece of paper in your wallet. I mean the definition. For most of American history, the dollar wasn't backed by gold. The dollar was gold. The Coinage Act of 1792 defined a dollar as 371.25 grains of pure silver or a specific weight of gold. The paper certificate was just a claim check. It was a money substitute. It had value only because you could walk into a bank and exchange it for the metal. Money is the gold. Currency is the receipt. In 1971, we broke that link. We turned the receipt into the product. We told the world, trust us. This paper is valuable because we say so. And for 50 years, the world accepted it. Why? Because the US economy was dominant and we paid interest on our bonds. But now, that trust is breaking. Foreign central banks aren't stupid. They know the difference between money and currency. That is why they are dumping the currency, treasuries, and buying the money, gold. They realize that the yield on treasuries, that 4% or 5% interest, is not enough to compensate for the fact that the underlying currency is losing value. They would rather own gold that yields nothing than dollars that yield 5% but lose 10% of their purchasing power annually. If going back to a gold standard would stabilize prices and stop inflation, why won't Congress do it? Why is there zero appetite in Washington for sound money? Because sound money forces you to tell the truth. The reason we went off the gold standard wasn't because gold failed. It was because politicians failed. Gold prevents deficit spending. If you are on a gold standard, you cannot spend money you don't have. If you want to fight a war in Vietnam or launch a Great Society welfare program, you have to raise taxes to pay for it. And politicians hate raising taxes because it gets them voted out of office. So, they abandoned gold. They chose the printing press because it allowed them to buy votes today and push the cost onto future generations through inflation. When I hear people in the crypto community say, gold failed, I have to laugh. Gold worked perfectly. It was doing its job, restricting government spending. That is exactly why the government fired it. They didn't want a disciplinarian. They wanted a blank check. And Bitcoin doesn't fix that political reality. Do you think the same politicians who hated the discipline of gold are going to voluntarily adopt the discipline of Bitcoin? Of course not. They will fight any restraint on their ability to print. This brings us to Donald Trump and the current trade war rhetoric. Trump has made it clear, we cannot have these massive trade deficits. He looks at the billions of dollars flowing to China, Mexico, and Europe, and he sees it as a loss. But what he, and many Americans, fail to understand is that the trade deficit is the price of the dollar's reserve status. It is a mathematical identity, Triffin's dilemma. To be the world's reserve currency, the US must run trade deficits. We have to export dollars so the rest of the world has enough liquidity to trade with each other. If we stop the trade deficits, we stop exporting dollars. If we stop exporting dollars, the world runs out of liquidity and has to find a new reserve currency. Trump wants two contradictory things. He wants a strong US manufacturing base, which requires a weaker dollar and lower deficits. And he wants the US dollar to remain king, which requires deficits. You cannot have both. We have lived beyond our means for 40 years because of this privilege. We buy cheap goods from China, and instead of paying with real assets, we pay with paper dollars that we print for free. China takes those dollars and buys our treasury bonds, effectively lending the money back to us at low interest rates. It is the greatest economic scam in history. But it is ending. Look at what the smart money is doing. Not the Wall Street speculators, but the sovereigns, central banks. In 2024 and 2025, central bank gold buying hit record levels. China is buying. Poland is buying. Turkey, India, Singapore. Who is selling? Nobody. Why are they accumulating gold and ignoring Bitcoin? If Bitcoin is digital gold, if it is the superior technology, why isn't the People's Bank of China stacking sats? Why isn't the Reserve Bank of India buying Bitcoin? Because they know what a sovereign asset is. Gold is a Tier 1 asset with no counterparty risk. It has a 5,000-year track record of settling trade balances between nations. Bitcoin is owned 40% by Americans. Half the Bitcoin nodes are in the West. To a foreign central bank, Bitcoin looks like another US-controlled asset. It looks like a high-beta tech stock, not a reserve asset. This is becoming a dangerous divergence. American retail investors and institutions are loading up on crypto, meme coins, NFTs, Bitcoin ETFs, while the rest of the world is dumping their paper assets and buying physical gold. They are buying factories, mines, and infrastructure. We are buying digital tokens. We are trading real wealth for speculative hype, and we are going to be left holding the bag when the music stops. What happens when this ends? Moving away from the dollar to gold is, in the short run, a catastrophic event for the American standard of living. We have built our entire economy on the privilege of the reserve currency. It is why we can have 30-year mortgages at relatively low rates. It is why we can have a military with 800 bases globally. It is why we can consume more than we produce. If the world goes back to a gold-based settlement system, which is exactly what the BRICS nations are building, the demand for dollars evaporates. All those dollars currently held overseas will come flooding back home. And when trillions of dollars chase a domestic supply of goods that hasn't grown, you get hyperinflation. Prices for everything, imports, energy, electronics, will skyrocket. Interest rates will not be 4% or 5%. They will be 10% or 15% because foreign central banks will no longer subsidize our debt. The U.S. government will be forced to choose between defaulting on entitlements, Social Security, Medicare, or printing money until the dollar is worthless. This brings us back to the start, the gold revaluation. Eventually, the pain of high interest rates and inflation will become too much. Congress will realize they cannot cut spending. They cannot default openly because it would destroy the banking system. So they will choose the soft default. They will announce a new price for gold, maybe $20,000, maybe $50,000. It will be framed as a stabilization measure. They will say it is to protect the dollar. But in reality, it will be the admission that the Fiat experiment of 1971 has failed. It will wipe out the real value of the debt, but it will also wipe out the real value of your savings if they are held in dollars. This is why holding physical assets, gold, silver, land, is not a trade. It is insurance. It is insurance against a government that has trapped itself in a mathematical corner and only has one way out: devaluation. The revaluation is coming. The only question is whether you will own the asset that gets revalued, gold, or the currency that gets devalued, the dollar. Thanks for watching. Subscribe to the Dollar Watch if you want to be on the right side of this wealth transfer. I'll see you in the next video.